Order filled.
All right, maybe it's working now. See if I can open this up. What microphone is that? That is the default microphone. We don't want that. We want the Shure microphone. Here we go. Interesting. All right, maybe now it's working. Maybe now it's working. I think what you're just hearing is the mic on the camera, though. So it's probably pretty shitty sound. Overall, not a great experience here. I think I'm just going to, hold on. Okay, the camera seems to be working. How come it can't find this? I see that's working there. All right. Very low. Yeah, because it's coming off the wrong microphone. So I think I'm just going to call it here. And let me cancel this stream. I'm going to close this stream. And I'll be back in 5. Yeah, you guys can hear me, but you can hear me only off the wrong mic. Don't know why I can't find this mic. This audio device is unavailable. Let's remove it. Maybe I can figure this out. All right, there we go. Now it should be working. Now it should sound good. One more time. Does it sound good now? This should be the right mic. Should sound good. Louder now? Louder and clear, like a radio voice. Okay, good. All right, thanks for sticking around. We'll see if we can... I got an appointment that starts at 11:30. Got some people coming over to the house. So we'll just do it briefly here. It looks like this is all now working. So thanks for your patience there. God, the lighting's not good. We'll work on the lighting next. I am wearing my Let's Summon Demons t-shirt. This is a good t-shirt here. All right, so shortened holiday week, but we're getting a little decent amount of movement here. So kind of around the horn, here's a couple Bullinox accounts. Bullinox is very similar to Apex Trader Funding. I do the 50s and 25s, but generally just the 25s now because the reward to risk ratio in terms of the amount of drawdown that you can take relative to the profit objective is most advantageous. I can teach you some of these strategies in about 30 seconds. This is called stay in your lane. It's 2 standard deviations away from VWAP right here. And it's a mean reversion strategy most of the time. There's other filters that we can use to decide if we want to trend trade it a little bit. Today you can see we had a little bit of a downtrend, and the NASDAQ at least is trying to make a run for VWAP again. So we're looking to be buyers here in the bid zone and sellers here in the offer zone and stay out of the middle. Generally, VWAP is going to be a target. In the case of this account here, I'm connected to a paper account that I'm just using to reflect kind of my swing trading account over on Interactive Brokers, which I don't show here in the room for a variety of reasons. But our main focus is using Ninja and Tradeovate to trade this same strategy in these smaller accounts. So I watch a decent amount of these streams, and what I find is not as useful is describing the theory, logic, and the application of what we're actually looking to do. So here on this short on the S&P, we're going to cover at, I mean, these are really narrow ranges. So prior session's VPOC, which is 45.46, is a level. You could get long or short there. In this case, I'll use it as a, eventually, I should put an order in here like that. So that's the look there. We have a little bit of an accidental hedge against the short on the S&P, given that we're long the NASDAQ, but it's not done as a hedge. So the idea here is same thing, line to line. This blue line down here is 1 standard deviation. We'll get long there, and our target will be VWAP here at 15,993. These two strategies are complementary. This is the range trader over here on the left. This is stay in your lane on the right here on Ninja. These are called brick wicks or modified Renkos. They're available on Ninja from a company called NinjaTrader or Ninja, and they have the Ninja Renkos. You can actually download those for free after signing up for this 10-day trial for 10 bucks. If you're cheap and you don't even want to pay 10 bucks, I'll give you a coupon. You can use coupon SAVE10, and then it's free. There's no rebill. You do have to put in your credit card number, but it doesn't bill anything. I think it checks if you have $1. That's about it. So you can download those Renko bars right here. They're modified Renkos that are based on tick charts. So just hit target on one of the shorts there. Again, these are very, very narrow ranges, not a whole lot going on. So we didn't really get much movement from the Fed minutes. Pop in any questions if you have some questions in there. Also welcome feedback on what's useful when people are streaming and trading live. Don't think it's really that feasible to come in and jump into the middle of a movie here. But I do want it to be a little bit more than just randomly talking about markets and things, because these strategies are 100% precise. The stay in your lane strategy here is about as precise as it gets. And the reason that I teach and train on these particular strategies is that mean reversion for small account trading gets you the highest probability entries, so that they're hence the easier trades to manage risk. Okay? So I would suggest that if you are looking to pass these programs, we won't even get into first and foremost that everybody that's trading minis in these programs is highly over leveraged. So you want to probably stay away from that. But if you can start with the micros, use the micros because they also allow you to trade these types of strategies. In other words, scaling in or building positions at certain levels. Down here is our bid zone. In other words, this is where we would look to go long or take profits on shorts. Okay, and then up here is our offer zone. This is where we look to go short or take profits on longs. The other thing that so many traders do is they overcomplicate trade management. Trading is about high probability entries and risk management. And those high probability entries are generally informed by volatility and volume. So if you have volatility and volume and an understanding of how fast the car is going that you're driving in, and you can, look at the speedometer, you should generally be able to not smash into the wall going 100 miles an hour. But Rod, if I short at 45.60 and it keeps going higher, what do I do? Hit the close button. If I go long at 45.38 and it goes lower, what do I do? Hit the close button. I mean, it's really that simple. Establish a daily risk budget, the most that you're allowed to lose during a session. That should be about 10% of your available drawdown, not the max amount that the firm allows you to lose. It's getting a little frustrating to me that there's some firms out there that are promoting traders that run up huge balances and then take their max loss multiple days in a row. Great. You want to call that professional trading? It's a joke. Truly professional traders don't have any need for these programs because they're capitalized well enough from whatever. Generally not from trading, but from their businesses, and they put in the time, effort, and all the skill development required to do this type of stuff. That being said, these programs are phenomenal teaching tools. And yes, you can cash flow them if you do the programs properly. Okay, so let's see here. We got no questions coming in, which is fine. It's absolute precision here. If we hit 941, we'll get long. If we hit 993s, we'll take a profit. Really need this NASDAQ to pop a little bit here, and as well as the Russell coming off value area low, 1789s. P&L for the day is about what I do during our trading room, maybe a little bit more, maybe a little bit less. The whole goal is to always avoid running up your emotional capital and having a large losing day. So this is the scorecard that we use in the trade room. And your profits should be informed by the amount of risk that you're taking. Okay, it's your version of a Sharpe ratio or a Sartina or a Kalmar. Okay, the amount of traders that have any understanding of Sharpe, Kalmar, Sartina, or any kind of risk-reward ratios or true alpha generation is about 0. There's just none. So if you're one of the 20 people listening to this, we can educate you real quickly. You need to establish a daily risk budget, and based on that daily risk budget, that informs how well you are profiting. This concept of making $500 a day or $50 a day or $1,000 a day, it's all nonsense. That's not how trading works. You have to get used to the uncertainty and then essentially make a little, make a little, make a little, lose a little, lose a little, make a lot. Make a little, lose a little, make a lot. So what we're looking to do here is always avoid this large R area. Establish a daily risk budget, have it be about 10% of your available drawdown, trade micros, and then do not, under any circumstance, violate this risk budget. So rather than figuring out how fast you can get to a certain amount of profit per day. Track 22 trading sessions, about 22 to 25 trading sessions per month, sometimes a little more, sometimes less, depends on holidays. Track the amount of trading sessions that you can go without ever having a large losing day, without ever violating your risk budget. You start to string that together, you're going to keep your emotional capital under control. So what we talk about is, can you put up small G days, which means that you've profited $1 more than your available risk budget. If your risk budget is $250 a day, you made $232. You had a lowercase g and then some number over here of emotional capital. It is not necessary to be on a P&L roller coaster all the time. At all. For some reason, there's so many people that believe that blowing up accounts and losing money is the rite of passage to doing this. It's not. I can pass these prop programs at will, every single week, all the time, forever, never blowing one up. If you ever watch my screen or anything, you'll never see a program that's less than the starting value, almost ever. If it is, I'll point it out. And I'm pretty adamant about this. There is no other way to trade small accounts. Prop accounts, the way these programs are structured, are ridiculously small accounts. If your goal is to take $3,000 to $4,000 of risk budget and jack it up to 15 grand, great. It's unsustainable. Take a payout, pay yourself $3,000, $5,000, $10,000, and be thrilled that you pulled it off. But that type of behavior is completely toxic. The turnover traders at these prop firms is over 90%. As high as 95%. Why? Because they're all doing it wrong. And the firms want to highlight the 1 in 1,000 that manages to do it wrong and have some moniker of success for a period of time. Well, don't do that. Eventually, maybe they're going to highlight our Acorns to Oak Trees method and the fact that there's now dozens and dozens of traders that are taking $500,000 payouts every single payout period without any emotional capital risk, without volatile P&Ls or anything like that, because that's how these programs should be structured. All right, I'm going to buy one here at this line, which is a little different. Don't worry about what that line is. Nothing really happening or moving around here. What about crude? So we do have, here's crude oil. Crude oil can be traded using both strategies. So here's crude on the stay in your lane. The range today in crude oil is very limited. And when I say that, I'm not just making it up. Everything is repeatable, systematic, measurable. If you do not have volatility, volume, and an understanding of range for the session, then you don't know what you're doing. So the range for crude oil today has been 99 cents. Crude oil's 7-day ATR is 294. So we've done a third of the expected range. Now we had some pretty big range expansion in crude oil back here. That was Thursday of last week, I think. So crude oil here is just a no touch. There's nothing to do. What we would describe this as right now is a bull continuation pattern inside day. which means that it's trading above the 233 EMA between these two levels. Prior session high comes in at 78.46. Prior session low comes in at 75.43. Everything in here on a 1/3 available range day is total noise and nonsense. So the answer is, great question. What about crude? What about crude? Nothing today. So nothing today. Khalil, did that make sense? Well, I mean, I just gave you a quick answer, but that's the way we would look at it here. And it's the same thing reflective over here. Your 2 standard deviations are 77, 78. Your 2 standard deviations below that is 77. That's a 78-cent range, which is untradeable. Untradeable in crude oil from a mean reversion standpoint. So what I did is I dropped in a link to the Futures Fanatic course. I think it's also in the information that I put down below. Another thing that I'll mention is that, let me grab it here from our Discord. The Discord is members only Discord, but let me grab you this right here. Oh. Let me make this a little shorter. There we go. All right, so does it have any effect on FOMC? This FOMC minute, so crude oil, like every instrument on actual FOMC days where there's a Fed policy statement, it'll move around a little bit. We already had the policy statement. It came out. It was a bit of a bore. For 15 years, FOMC minutes were meaningless. 20 years. They were somewhat meaningful during the Fed policy was pretty important during the financial crisis. But now in the New World Order since 2021, you know, with the things that have happened with rates, policy FOMC minutes now have become somewhat interesting. But they didn't do anything today for the indices for the most part, so it didn't really affect crude. Then on the Flowbots thing, I just wanted to let you guys know if there's a lot of people that are interested in trade copiers. I've done some videos on it before. Over on Tradeovate, there's a built-in trade copier. It's called the account groups. Okay. It's under here, under manage groups. I won't go through all this today, but if you just search on my YouTube channel, there's a video on that I did on this. It's a little clunky. It's not great, but it does allow you to have all, see, what I have over here is 5 what are called funded PA accounts and then 5 that I'm working on. If you're familiar with how this all works, these are the first 5 that have ever been funded here, but then up here I'm up at 95. How is that possible? Would you blow up 90 accounts before that? No. I passed them all and just canceled. but because I was just finally once and for all tired of the trolls. Hey man, I don't even see you on the payout list from Apex. You're probably never going to see me on the payout list from Apex. I'm going to run these up to whatever and then probably never take payouts. It's for educational purposes, but might as well show you that this kind of stuff works. So these are the last that I'll ever do. We'll fund this and we'll have 10 of them here. And once you have 10 accounts, it's probably very unreasonable to not use a replicator. What I've done is copy these into 2 different account groups. One is for the evaluation and the other is for the funded accounts. So that's over on Tradeovate. But a much more powerful trade copier is called Replicanto. It's available from a firm called Flowbots, and they're having a 40% off sale. I don't stream just to promote stuff, even though I have the Apex thing on there. I don't care that much about those things, although the Apex and other affiliate fees have grown to be somewhat substantial. I just want people to know when there's discounts on good stuff. So I use this all the time. This allows you to copy between any connected accounts that you can see on Ninja. So if you have a multi-broker license, which I have here, let me connect to Interactive Brokers as well, to a small Interactive Brokers account I have. I believe there's about $8,000 or $9,000 in that account, $9,600 in this one. So now that I'm connected, I could go ahead and copy between any of these connected accounts. An account on Ninja, an account on Interactive Brokers, and then these rhythmic connected accounts from Bullinox. So anyway, that's the link that I put in there. What are the entries and exits for the 30-minute range trader? Stay in your lane makes sense, but not to clear in the range trade. Great question. Okay, so first, before I get into that, let's just see how easy stay in your lane is, right? It's just, we're looking to buy or build positions long in the bid zone. We're looking to get short and build short positions in the offer zone. For most days, we're going to use VWAP and the 34-period moving average here as a target. So on the range trader, there is 5 or 6 levels that are important, okay? The first thing we want to do is establish the trend, and this is done by using the T-line, which is a 233 EMA. Why 233? Just listen to me, because we tested hundreds of thousands, if not millions, of combinations of things over the last 15 years on TradeStation, and we came up with one that was relevant and simple that we could use on 30, 60-minute, 2-hour, 4-hour, 8-hour, and daily time frames. I would not suggest that you apply a 233 EMA to a 5-minute or 10-minute or 15-minute. Use 30 minutes or higher. We're using 30 minutes for the most part because that's what TPO and volume profile and all that good stuff was based on. So the first level is the range trader. The first level is T-line. T-line is always a level. Doesn't mean you always buy it, but in this case, if we pulled back to 45.20, we would have an SOS2 or strength of signal 2 because we have T-line plus the prior session low. So the next two and most important levels on the range trader are the prior session's highs and lows. Hence the term range trader, okay? Yesterday, if you look here on the S&P, price was above the prior session's high of 45.39. And in fact, it even put in a VPOC level here above the prior session high. When you have these days, you want to tend to stay out of trying to look for mean reversion because you're outside the prior session's range, okay? So yes, this could have been a short, and then you had to manage risk once it broke above. You had no ads, nothing you could do. Now this over here is the one proprietary thing that I developed and still sell. I don't sell it, but it's part of being a member of my group. It's called the extreme turn. And the extreme turn here actually identified basically the top, as it often does. The signal went on. I won't get into how to manage the extreme turn, but you also have the extreme turn on your 30, 60, 2-hour, 4-hour time frames if you want. And it's part of the range trader. So prior sessions, highs and lows, T-line. The next thing is consideration of prior sessions VPOC. So prior sessions VPOC is usually a target. Not always, but usually a target, but it's always a level. So for instance, if the market were to go higher here, I get a fill at 64 and 71. First of all, what is 71? It's prior sessions high. So that's a short. The current target on this short is prior sessions VPOC, which is 45.46. Now, what's interesting about the range trader is I don't do a whole lot with the current range other than look at it. So 29, we put in a 29-point range against a 48 ATR. So it's a 49 ATR. This ATR is a 7-day ATR. Take out the weekends, okay? And it's for the entire 23-hour range. What in the heck is the purpose of understanding the range of the regular trading hours? Well, Rod, I only trade the regular trading hours. But that doesn't matter. What matters is what is the range from the open at 6 p.m. Eastern Standard Time all the way through to when you're trading. That informs what actually has happened. Because we have muscle memory from the past, right? Not from the distant past. Just go back to the prior session's day. Prior session's highs and lows. Prior session's profile. The current profile is generally not as interesting to me until we have some things that sort of line up. Hold on a second. Okay. I'm going to have to end the stream in about 5 minutes. There's a guy coming in the gate. So moving odds, there you go. That's a little bit. So let's go through them again. Prior session high and low, T-line or 233 MA, and prior session VPOC. Prior session low, always a long. Prior session high, always a short. Prior session VPOC, sometimes a target, sometimes can be used as an entry. Hopefully that helped. I want to just see if the oh yeah, there it is. Yeah, it looks pretty cool. FOMC minutes, futures prop stream live. Love it. All right. Any other questions? We'll go for about another 2 or 3 minutes here. Another thing to remind everybody that we have NVIDIA earnings after the bell. Those could whip the whole markets around, certainly the NASDAQ. The NASDAQ, you know, could be up or down 100 points, maybe more, or it could be a total dud or nothing. But, you know, NVIDIA has certainly joined the ranks of Microsoft, Google, Facebook, Apple, Amazon, you know, one of the Magnificent Sevens or whatever, and that can move things around. Based on my current positioning, I'm hopeful. Hope is not a strategy, right? But that it. All right, I'm going to sell a few of those. Another thing that I think makes our group and some of the stuff that I do, I've been trading futures actively since the first mini in September of 1997, and I joined Merrill Lynch in 1993. Was trading OEX and futures, the big contract from 95. So I won't use the joke of I know I don't look it, because I kind of maybe do look it, but so I'm also very involved in options on futures or futures options, which is a very niche part of the market. And I make markets and become very interested in trying to teach and train on the beauty of futures options, specifically just a couple contracts, the ZN, which is the 10-year, very liquid, low margin requirements, the MNQ and the MES. Now, futures options have anemic, crappy ass volume. You can't do spreads. You should not leg into, you should not put on multi-leg kind of things, strangles, straddles, all those things. What you can do is use them as a proxy for directional movement. So yesterday, when the NASDAQ was torturing souls on the short side up here, let me get to the NASDAQ. Right up here, I sold the 16,100 calls, sold 3 of them. So I'm still short those. And I also sold the 45.75s way up here. We didn't even quite get up there. And I got those for $15. I took them off today in a funny way for an error. They were flashing 70 cents by $11. I thought I middled it, and then they immediately took $11. And then when I fixed it, they took it at 5. So it's pretty funny. Anyhow, futures options are super powerful if you know anything about regular options. Regular options, yeah, you get a ton of leverage, but you can't do a whole lot with the underlying because it represents 100 shares. 100 shares is 100 times the contract that you just sold, right? It's 1 times the contract value. In options on futures, it's one, it's the dollar value or point value. It's the dollar value of the contract you sold times the point value of the contract. And without confusing you all, you don't have to worry about that. But the most important thing is if I'm short 16,100 NASDAQ calls going into Friday, my only obligation is I would be short at 16,100. One contract for every one I sold. Excuse me, one underlying for every contract I sold. Way different. Way different. All right, I'm going to gracefully exit this here, this ad that I did right here. See if I can get out of it. He said, optimistically. Has anyone here ever traded a futures option or options on future? I do have a video over here on my YouTube channel. Only futures and Forex, okay? Well, if you've traded equity options before, which I imagine many folks have, experimented a little bit with equity options. Let me see if I can find the video that I did on it. The amount of content I create is very limited relative to my ambitions. The problem is I have other things going on. Here we go. So here's a video right here, how and why you should trade micro E-mini NASDAQ futures options. So there's a video right there. And as you can see, futures option contracts are only 1-to-1, baby. Yeah, well, futures themselves avoid pattern day trade regulation, so that's nice, whereas equity options don't. Yeah, I mean, if it's your first time ever seeing me stream or anything, come over here and check out some of my content. Again, I really should create more, and we'll see. All right, I think we're going to go ahead and end the stream there. The main takeaways, gang, for options on futures, and the most important thing is that you can be short without all the assignment risk stuff. Most people can't risk being assigned when they're trading options. So they either make money or they don't. And a lot of the time, their retail traders are 90% long. Or if they have shorts, then they have credit spreads or debit spreads on. Sorry, shorts would be debit spreads generally. Sorry, credit spreads. But, you know, they're limiting the amount of money they can make. They don't have as much flexibility, and they can't trade around the position using the underlying. Whereas with the futures markets, you can. Being long for me, the MNQ right now, not in this particular account, but across my portfolio, being long the MNQ at 972, I have short calls that are 125 points, 130 points in the money. Now, I could certainly lose more on a long than the amount of credit that I brought in on the 16,100s, but not much, because I think I got $80 per contract. And that's 80 times 2, so it's $160. Okay, that'll be it for today. Thanks for everyone who stuck around through the technical difficulties. Again, if you want to find out more and come join me, I trade every single day live. Focus mostly on the prop programs, I mean pretty much entirely. And you can do it right over here. Just check out Try TDG or get started for free to download the... Hey, how you doing? All right, everybody, stay green, trade like you mean it. Thanks.